Okay, guys, so welcome to the last technical day of this boot camp. Right, today is the last day we're doing technical analysis. Tomorrow is the grand finale, and tomorrow's the theme for tomorrow's training is called the Father's Blessing. All right, so let me just quickly share what we have for tomorrow, so that you guys will not miss out. This is the grand finale of our program we have been having for the past 7 days. Right, so it's best to take a look at what we'll be having tomorrow, right? So if you have been watching these videos from the first day to this very day, I want to really say big thank you, big congratulations, because you are definitely not going to be the same, because there's no how you can be exposing yourself to such information for the past 21 days, including today, and you will not have something to show. It's not possible, right? So let's have the flyer for tomorrow, which is the last day of this training. Okay, so tomorrow you can see the flyer on my screen. Yeah, it's titled The Father's Blessing. All right. So it's beyond the charts, right? It's also 1 hour teaching. We'll be going beyond the charts, right? We're going beyond the charts because many people think that trading is all about reading the technical analysis and blah blah blah, right? So we actually go beyond the chart. I think in which I couldn't even include in this boot camp because of the limited time, because it's 21 days. While my paid mentorship is 1 year, so you can see that I'm trying to compress 1 year teaching into 22 days. You see that it's been very difficult for me to do so, right? So the Father's Blessing is happening on Saturday. It's going to be a 1 hour teaching. The things I feel that many people don't pay attention to, right? It's not going to be some stuff that's talking about technical analysis, right? So this is the last technical analysis class. So tomorrow we'll be going beyond the chart. That's the things that you need to put in place, because a popular Bible quote says, "If the foundation be destroyed, what can the righteous do?" Right? That means there are things that even if you study so hard, there are things that you need to put in place. So things such as the proper mindset, having the income structure that is stable, all of all those things, having long-term goal projections. I'm just talking about a lot of things today, locating a good community, blah, blah, and blah. Are most important, right? So this is the write-up for it. So after 3 years teaching, tomorrow we're going to be having a teaching with 1 hour teaching for the Father's Blessing, the same time as usual. And don't forget that tomorrow we'll be celebrating our 3 years anniversary, 3 years of impact, 3 years of mentorship, 3 years of undiluted wisdom, right? So tomorrow is the grand finale, and you can also do what to appreciate the academy. If you have learned something tomorrow, do how to make tomorrow special. Don't just close your mouth and just say happy anniversary. You can make a post, on your social media accounts. You can post some things, what you have learned, what you have benefited. If you have gotten any value, you can just make a post about it tomorrow. Right? Let's make tomorrow special. 22nd is our anniversary, right? And the anniversary wouldn't have been possible without you. And for the past 22 days, we have been teaching you guys for free, right? I've been the one paying for my data. I've been the one, using my time to teach you guys for the past 22 days. So it's not a big deal that tomorrow you just come and, celebrate. This is what I have learned. We're not asking you for money. Just celebrate a little bit tomorrow. We're not asking that you should send money for us, right? We don't need your money, right? What you just need, if you have learned something, just celebrate us, right? You have, this is what I've learned from the academy. Even the paid students are watching this. You can always drop something that you have actually gotten from the academy. What has Geoffrey done for you? What has the academy done for you? You can also make it a post on your social media accounts and put the tag Elektronfx Academy, right? So whatever you're posting, just put the tag on it, Elektronfx Academy, right? Or just put Elektronfx, right? Just make it. Let us make this trend tomorrow. Right, tomorrow is the last day. Let's make a trend, right? Let's make a trend. Just put the tag on your Twitter page, Elektronfx, and let's see how we can trend tomorrow, right? So we're planning to trend tomorrow. For you to trend on Twitter, you need at least 1,000 posts with the same tag, right? So can we achieve 1,000 posts tomorrow? Can we achieve this tomorrow? It's very possible, right? I have about 3,900 people on my Twitter page. If just 500 of you, right, can just make 2 posts with the tag, just tag it Elektronfx, just make a post and then put the tag, just 2 posts, or even on all your comments for tomorrow. Just make sure whatever your comments, just put this tag on it so that we can hit 1,000 posts. We want to trend tomorrow. We want to trend on Twitter tomorrow. We want to really trend tomorrow, which is the 22nd day of June, which is the 3rd year anniversary. We want to trend tomorrow. Right? We're targeting 1,000 posts. I just put anything you post tomorrow, any comments you make, just put Elektronfx, so we can also trend. You want to trend on Twitter search engine so they can know that something is going on tomorrow, right? This is the least you can do, right? We're not asking to send money. All we're asking is to make a post and put a tag, an appreciative post, or any of your comments. Just make sure you put a tag so we can be able to do that, right? And I won't be announcing anything because it seems as though I'll be paying you. I'm not paying anybody. If you have learned something from the academy, just make this post. Right? I'm not promising you anything, right? So that is basically what we wanted to do, right? So let's go to today's teaching. Let's talk about the final topic is obviously the most important topic, right? Which is what top-down analysis, right? So let's talk about top-down analysis. This is the meat of the matter, right? Right from the first day, we have been talking about higher time frame structures. We're talking about lower time frame entries. We're talking about a lot of things, seasonalities, blah, blah, and blah, right? So now, let us just do an assumption now. Assuming that you're just coming to the chat for the first time in the week or maybe in the month, how do you start your analysis, right? I may not be, talking to maybe I may not be talking about lower time frame entries and about those things before. I will just be giving an overview, right? An overall overview of what you should be doing with your regards to your top-down analysis. All right. So for top-down analysis, first thing you have to do, right? I'll just be listening to them, so you will just follow this order, right? First, you want to first of all, if you just start the month, you want to check what the seasonality, right? You want to know the seasonality. Is this a bullish seasonality? Do we expect dollar to be bullish in this season? So you look at the seasonality charts, which I talked about yesterday, or I think 2 days ago. I don't know which day it was again. I think yesterday or day before yesterday. I talk about seasonality, right? So you have to check, is this a bullish or bearish seasonality? And don't forget that we look at that as the equity clock. So watch yesterday's teaching, or I think 2 days ago, I talked about seasonality, right? The video is actually on our YouTube channel, right? It's actually on our YouTube channel. Just watch the video on seasonality, right? So that's the first thing you want to know. I want to understand the seasonality. Do we expect a bullish season? Like for instance, in December, we usually see dollar drop in December, right? So is this a period where dollar drops, or is this where the dollar goes bullish, right? Those things tend to affect what the traders' behavior, because traders, they focus on patterns, right? Traders focus on patterns. Both the hedge funds, we are all human beings, right? No matter who is trading or who is not trading, we are all human beings that are behind the charts, right? We're all humans behind the charts. I'm a human being behind the chart talking to you, and you listening, you're also a human being maybe behind the phone or whatever you're using to listen, maybe your laptop or whatever you're using to listen to this teaching, right? So you have to understand the seasonality, right? What is the seasonality of the markets? Then that one is always done at the beginning of the month. So you always do it at the beginning of the month to know what you should expect for that month. Like, it's not really something you should be worried about, just an overall picture. And then the second thing you want to understand is when you come to your chart, you want to understand the trend of the market. Is it likely to go bullish or bearish? And then you use from the trend of the market, there are two things you consider in the trend of the market. What are the things you consider in the trend of the market? Look at what the structure, right? This is what you look at in the trend: structure and liquidity, right? What is the structure? What is the liquidity area? Right? This helps you to know where you are to go. For instance, now you have maybe some kind of you have a bearish, maybe market sort of break, and then you have what a bearish retest. Now the market is bearish, and then you have your liquidity here. Maybe you have some kind of imbalance here, which price needs to come balance, right? So now this now becomes what your bearish draw on liquidity, which is what this imbalance. Don't forget that I told you guys how to locate daily bias, or how to know where the market should go. Right now you have a bearish break of structure, and then you have this imbalance down here. This now tells you that this bearish break, right, might be the catalyst for price to push down to this imbalance here, right? That is basically what you are doing. So you want to look at the structure, you want to look at liquidity, and under liquidity, we're looking at previous highs and lows, and also imbalances. So imbalances also serve as liquidity because it kind of act as a magnet for price. It kind of draw price towards itself, right? So whenever an imbalance is printed against the trend, it seems to be an area where price wants to draw towards rather, right? So you have to consider that. And then of course it may not always be imbalanced. It can also be liquidity pools. For instance, now maybe you have some kind of equal lows here, right? Maybe price is something like this, right? Maybe price is something like this, okay? All right, maybe price is something like this. So now the market broke so and then it failed to make a new low, right? If you fail to break this low, so you now have what equal lows here, What do you expect? Market should do what? Come and break and tap through that liquidity. So now you have what? The structure bearish. I also have what? The liquidity what? Bearish. That is supporting what market will drop down. So you want to see reasons why the market should go down based on the structural perspective and the liquidity perspective. Those are the two reasons where you should pay attention to. Right? That's how to determine the trend of the market. So now when you have determined the trend of the market, what is the next thing that you do? The next thing you do is simply what? Number 3, you simply go to what? You look out for what? Very simple. You look out for what? The higher time frame POI. Now, on the higher time frame of interest, you're not considering what? Discount and premium. These are the things you consider for this. So when you're talking about POI, you're not considering what? Discounts or premium levels. That means 50% of your FIP2. So you consider your discount or your premium levels. Is it you before I be? All right. So consider your premium levels. Then you're not considering what? Your higher time frame PDRs. Right. So you're not considering what? PDRs / key level. So you can also refer to PDR as the key levels. Right. So now under these key levels, of course, you know what key levels to talk about. Right. It could be, it could be the advanced key levels. Now, anything that gives you confluence, what you're looking at for here. So PDRs include what? These key levels and PDRs include what, other blocks, certain that includes, right, other blocks. This is a point of interest, right? It could include other blocks. It could be what? An institutional candle, right? This could be what? A breaker. It could be anything at all, right? It could be a breaker. It could be a fair value gap, right? And fair value gaps includes both inverted fair value gaps and what? Balanced price ranges. I talk about balanced price ranges in one of the teachings, right? So do want to watch that particular teaching on fair value gaps. I talk about inverted gaps. I also talk about balanced price range. So watch the video if you have not watched the video of the first video on fair value gaps, right? So these are one of the handful. And then you're also looking for what? Open, close, advanced key levels. Remember I talked about advanced key levels yesterday, which is the open, close level and all of that. So it can be advanced key levels, right? Using the line charts, right? You can also be looking at what? Support and resistance or demand and supply. So you can look at demand and supply zones, right? These are the areas that you consider as your high time POS, right? Right, these are the areas you consider as your areas of interest. Where, right? I won't mention support and resistance because I don't trade that, right? I should look at it from this perspective, right? It could be a demand or supply zone. So anything that gives you a reason why market should drop is considered what a PDR. And this PDR, don't forget that PDR should be what at your discount level. What is discount level? Discount level is simply what 50% of the trading range. That means market is bearish. It's simply what you plot a FIB tool from the high to the low, right? And you want to look for POIs that are what at the top 50%. That means any POI that is around what this 50% what you're looking at for. So this is what we're talking about. So PDR simply means if you're bearish, you want the upper 50%. If you're bullish, you want the lower 50%. What do I mean by that? So if you're bullish, you want the lower 50%. If you're bearish, you want what? The upper 50%. Right? That's basically what they're doing. So you have to consider this very, very essential. So when you do this, you now have what? Your POI. So your POI is, you have to also consider the time frame, right? So now when it comes to POI, there are 2 time frames I actually look at for me as a person, right? There are about 2 time frames I look at for POI. I look at what daily, I look at also weekly. So that the 2 time frames I look for POI. So I want to get my POI on the daily or the weekly. This is the higher time frame POI. Right? You should always be trading with the daily and the weekly because it gives you a perspective to what price is doing. Especially the daily chart gives you, because this is what the market is doing, right? So you use your daily and weekly for what? To determine your POI, where the market's likely going to go, where is the market coming from, and all of that. So use daily and weekly for the two. Use daily for the trend and structure. You also use daily and weekly for the POI too. Right? Then for the POI, you can also include them 4 hour too. Right? You can also add 4 hours for this. So this is what's used for these 2 things. You can also add 4 hours too. Or this is daily for a trend, can use 4 hours for the POI, right? So these 2 things fall in between these 3 time frames, right? There's no specific way to do it. Sometimes the POI is on the daily, sometimes it's on the weekly, sometimes on the 4 hours. So you have to always be able to swap between time frames. You go from this one to that one and then to the next one, right? That is basically how you're able to spot your POI, your point of interest, all right? So when you have that, then that is done. Now, the next thing you're looking for is what? You're looking for what? Lower time frame structure, right? That is where you have your lower time. You have to look at what? Lower time frame range, all right? So structure. So you have to look at the lower time frame structure range, Right now, in the lower time frame structure range, you're looking at what the market is. Has it given a confirmation? Is it ready to move? Because the market can be bullish on the daily, but it's not ready to move on the lower time frame. So you have to have what that's lower time frame structural change or that confirmation. The market wants to go a direction. That means, what do I mean? So you look at what now in this side, you now look at 4 hour, now look at maybe the 1 hour, now look at maybe 30 minutes. Right? The time frames between these three time frames now fall into this. So you can look at the 4 hour, 30 minutes, 1 hour to quantify this lower time frame structure. Okay, is the market ready to move now? Right? Are we ready to move? So this is why you confirm it on the lower time frame. So you don't just enter a trade just because you saw a daily order block. No, the stop loss is going to be too much. Like you're going to have very large stop loss. So you have to use the lower time frame to confirm that this move is still ready to move. Okay, are we ready to move now? Are we ready to send price lower? That's what you basically do on the lower time frame, right? So that is basically what you do on the lower time frame. And I want to show you guys one example of this. So I'm loading up my charts. All right, so when that is done, now you're ready for your trade. This is basically 4 things you're doing. You look at seasonality at the beginning of the month, that is the early days of the month, or once in maybe 2 weeks, you check this and know the seasonality of the market. And then now begin to consider what the trend, structure, liquidity, begin to consider what the higher time frame point of interest, and then the lower time frame range. Are we ready for that? And the fifth thing, which is the last thing you look at for, is what look at what your session and lower time frame confirmation. So don't forget that you have to always consider your time. Time and price is very important. You have to consider when you take your trade because it will determine a lot. So if you guys are taking USD trades in Asian session, so if you guys are buying GBP USD in Asia session, so if you guys buy Nasdaq in the London session, so you have to always consider the session you're trading because it's very, very important. Because this session works hand in glove with the lower time frame confirmation, right? If you want to have an entry, right, you have to always consider what the session you're taking a trade, because if you're taking a trade in Asia, it might be a trap for you, right? So now, when you have your session in place, you wait for the session that's wait for the right session or the right time, right? So session time, right? So let me just edit that properly. So you can have both time slash session, right? Because time and price is key. So we have Q zone, all of those things, right? So I have Q zones here, all of those fun stuff, right? So we have Q zones, session, all of that, right? They fall into time and session, right? You have to consider the time you're taking your trade because it's very important. Imagine going to go and trade maybe the JPY, AUD JPY in the New York session. You know it's not going to move someone because those pairs are Asian pairs. So you have to always consider the pair you're trading. What is the time for this pair to move? For instance, the London session, we see movement a lot in the GBP pairs. We see movement a lot in the Euro pairs. So most times in the London session, we're focusing on what Euro pairs and in GBP pairs. And then also you can focus on what German 30, those indices that are London based. Right? These are the pairs that I really focus on in London. Then for New York now, you cannot focus on any USD pair. That means you can focus on something like Euro USD. This is a USD pair, right? You can focus on Euro USD, can focus on USD CHF, can focus on USD JPY, on all of those funds, right? So you have to always consider the pair. Can I focus on gold? Can I focus on indices, right? Nasdaq. These are the pairs that really move in the New York session. Then for the Asian session, you focus on what AUD and JPY pairs, right? You focus on AUD and JPY pairs, right? You can look at AUD JPY. You can look at AUD card. You can look at CHF JPY. These are the pairs that mainly move what's the Asian session, right? So you have to always consider the pair you're trading before you do anything. It's very, very important that you consider the pair that you're trading, right? So you have to consider the pair, the time, and the session. These are those are 5 ways to do your analysis. You look at from the trend structure, high time POI range, and then your time, and then the session, right? Let's just look at just one example, and I'm using an example which I explained 2 days ago. So using that same example again, GBP USD. All right, so I think I posted this analysis on the public group. Right, I posted this analysis on the public group. My name is quickly look for it if I can see, so you guys can understand what I'm talking about. Because I actually posted this on the public Telegram community. Right, so yeah, let me show you guys so you guys can believe what I'm saying. So this is on my channel again. If you're not on the channel, you're really missing out a lot. You're missing out a lot because this is it. So I said that I'm bearish on GBPUSD. I pointed at I was expecting price to drop from this February gap. Look at it. So I was expecting price to drop from this February gap down to here because market was bearish. and we saw a bearish break, and then we had that PY there. And then we're expecting price to drop lower, right? Either in this gap or maybe that other block above there. So you can see where I posted it, and you can see the date. The date was actually on the 19th of June, right? You can see the date here. And it was about 1:12 a.m. New York time, right? Which is about 6 a.m. Nigerian time. So let's go back to the chart now. So you can see that I actually posted it. So let's go to the daily chart and see if it's paid out. So that is it. Don't forget that we're having our, you can join us at a 20% discount. So use the code June to join our paid group. Right? We have a paid mentorship group on, and you can join us for a 20% discount fee. And the offer is ending on the last day of the month, right? So you can join us with the link in the description. So now let's go to GBP USD. Let us confirm if what I said happened. Look at the charts. Can you see it? That it actually played out. So let me also explain a bit to this market structure. Now, looking at this market here, we can see that the market was based on seasonalities, right? I don't want to go to seasonality again. Just go and check seasonality for GPUs. You know that the GPUs is really bearish in the month of June. We were usually bearish in the month of June for the seasonality charts. Go and check seasonality. These GPUs is usually very bearish. Go and check it. You'll see there. And we are still expecting price to drop lower. We still have that target here, right? That's gap. Right? Market price should still drop more, right? So we have this liquidity grab. What do you see here? Market is bearish, right? Watch this. So market is bearish. You took out this liquidity, right? Liquidity has been taken. And if you go to the weekly chart, you said there was already a very clear break of structure, right? So this is a weekly chart now. Can you see that market broke this swing low? There was a break of structure here, right? And then inside there, so another break of structure. I see the market is giving what? That's bearish signature. So market took out this swing below as well. That is break of structure. Markets came, tapped into what? Our POI. This is our POI. Yes. So market tapped into our weekly order block and then broke down. The same thing happened there. Price tapped into our order block and now it's breaking down as well. Can you see this? So we're having what? A bearish structure inside a bearish structure. So now if you go to the daily chart, we now saw what? A liquidity grab, right? So the daily chart we had was this market without liquidity, then we saw it was a break to the downside. Now, if you look at the daily chart very carefully, we also saw what? Another break. So we had what? Another break of structure here. Market took out this low, right? And then what we have here? A bearish break, right? So you can see the market was giving us a bearish signal. And then where was our draw on liquidity? This liquidity down here, right? That became our draw on what? Liquidity, right? So now what happened next? We simply did what? We marked this as our point of interest. We had two POI actually here, but I marked the first one, which was this imbalance here. This is our first point of interest, because this now is our daily chart. Our first POI, that's imbalance there. That was our first point of interest. And then our second point of interest was obviously this other block here. So we also mark this other block as well. This other block. I can see our price tap into the other block and then fill this imbalance completely. Now we have that. What do we do next? We look for what? Lower time frame what? Confirmations. So we can go to maybe 30 minutes chart to see the current range. So inside the 30 minutes chart, we had something very beautiful. Okay, so this is 30 minutes chart now. Let me zoom out. Today is June 21st. All right. So this was our POI we're looking at. So this was our other block here. So this is other block where we hit it. Right, and then you can streamline to make it more accurate. This is also the other block here. This push down here. So it began. This is where the push down, the push up began, somewhere around there. So we tap into the other block here. And then if you go to the 15-minute chart, you will see it more clearly where we had our entry. All right, so now this is where we now include time session. So if you bring in our session 2, you can see that price came to this point and then we blew above Asian highs. Sorry. So blew above Asian highs here. And then this happened between the London and New York session. Remember, this is GBP/USD. We see GBP/USD moving in the London and New York, right? So took our Asian highs. And then what do we have here? Markets hit our other block. You can see the other block here. This is the open order. Markets hit our other block. And then what do we have here? We had what? A break of structure, right? So we had a break of structure. I can see that price did this during what? The New York session. You can see our price came back, to tap into that last order block here, right? So that was how we got our entry on this inside this order block there, right? Even if you don't want to use order block, you can simply bring out your fib tool and then use it for your entry. So you take out your tool from this swing high down to that swing low. You can see that we actually hit what sorry, this is fib tool, sorry. So we can actually hit our OTE level. So you can see how price came there. This is our OTE level. Can you see how price hit our 60% level? This will have been your sell. If you are using OTE, this will have been your sell at that 60% level. Stop loss above the high. But if you're using other blocks, that would have been your entry, that last push up. That would have been your, this is your institutional candle, this last down candle would have been your candle of entry, right? So that is basically how you can see how we're able to call this thing from the top to the bottom, right? It's very, very easy, actually. It's very easy, all right? So you can see how these things pan out in real time, right? So you have to always consider the trend, structure, liquidity, and all of these funds, right? You can see yesterday's price action. What the market do? Market ran down. Then in the London session, we had this other block here. So this other block right there. So price came back to tap into the other block, right? So you can see the market broke down, right? Broke down aggressively, came back, tap into the other block, and then what? Build down again. So this was a very perfect example. And this happened during what? The London session. You can see this happened during the London session. You can see it here. London session. This is why this move happened. So you have to always consider this session. You can see this move happened when the London. This happened when it happened what in the this break happened in the New York and then activated somewhere in the New York session, right? You can see how this happened in the New York. New York is between 8 o'clock to around 4 p.m. So this 8 o'clock, this 8 o'clock here. This is New York session, right? 8 to around 4. So you can see this happened during the New York session. You can see it happened during the New York session. You can see this move here, right? Very, very important. So you always have to consider this thing. You can see the second move here. We are bearish. Right? You can see how markets came back to that block inside what the London session, and then you can see how price drop. And you can see for today, what am I seeing for today? You can see that we are already pushing above Asian session, right? What are we seeing here? We see this big other block here, or let's see this imbalance here. I see this imbalance here, which might be the reason why price should go down. I can see this imbalance here, right? And then this might be a reason why price might go down. Right? I call that imbalance. So this watch what happens when price comes here. Right? Watch what happens if when price comes to this point here. Right? We have a lot of news today, so I will advise you guys to stay out. Right? So this is basically how to do your top-down analysis. Right? I won't talk more than this. And for Asian liquidity, I'm not really go down deep into that. Right? That's why you have to join our pay group, right? It's very important that you join the pay group. If you're watching this video, it's very, very important and crucial to join a pay group, because that is where we have more in-depth teachings, more community support, and all of those forms, right? So if you love this video, do out to attend tomorrow's teaching. Don't forget that tomorrow we're having what the Father's blessing, and it's happening by 8 p.m. the same time of today's teaching. So you can see the Father's blessing. You can see it here. Don't forget tomorrow's teaching. Don't miss it for anything in this world. Right. So see you guys tomorrow. Have a wonderful day, and don't forget to spread the word about the academy. Cheers and God.